Well, certainly one person who closely watches mortgage rates and all kinds of interest rates and their impact on both consumers and American businesses would be Frank Keating. He's currently president and CEO of the American Bankers Association. Of course, he's former governor of Oklahoma as well. Governor Keating, good to see you again, sir. Welcome.
Thanks, Bill. Susie, hi.
Do you think that the housing market right now is in such a state where it could withstand an appreciable rise in interest rates?
Well, I think the artificially low rates and the very low rates for first-time home buyers, single-family home loans, I think those could go up and people still would find the price of a house and the rate to borrow to buy that house to be appropriate. The difficulty is that the house price itself is going up, even though the rates themselves are still low and I think attractively low. So a combination of rising house prices, a modest recovery, obviously young people with a lot of student loan debt, and very rigid mortgage rules. We've seen less activity than we would like to see, but this is a great time. This month is a housing month in America, is a good time to buy a house with very, very low rates.
And yet, Governor Keating, we always hear from people anecdotally that how tough it is to get a loan, even if you have a good credit score and you have a good credit history. From the big banks that you talk to, the regional banks you talk to, do you see any of that changing anytime soon in terms of qualifying borrowers to get a mortgage or any kind of interest rate loan?
Well, I think all of us know that the only way a bank makes money is by making loans. They pay their employees, they pay their stockholders as a result of making loans. But the rules the Consumer Financial Protection Bureau has applied to this industry, the qualified mortgage rule requiring 43% debt to income, there are a lot of people that simply can't meet that. To be a QM loan, for example, to have your dad or mother to co-sign the loan, to do some creative financing and have the owner collateralize a portion of it, that's not a QM loan. So what we're looking for is some sanity is perhaps too extreme a word, but some understanding, some creativity, an opportunity to really look at the borrower and get creative about the financing. But if we could do that, then I think you'd see a lot more housing activity.
There are those who feel there's a dire trend going on, and you alluded to it, with those young people who are saddled with the student loan debt, which totals more than $1 trillion these days. There are those who feel that maybe there's a lost generation that's not going to be able to afford a home for years to come. Do you think that's the case, and what do you think that does for housing down the road?
Well, the first home I bought was a duplex, actually, when I was 27. Today, it would be 37. Young people my age back then, we all were trying to buy houses in our mid to late 20s, but now you can add 5, 6, or 7 years to that. Now, why is that? Well, student loan debt's a part of it. The absence of creative financing, the expense of a home compared to your income back then and your income now, it's a much higher percentage of your income, but it still is a savings account. I think a home is a great investment long term, and I would hope that we would get some rationality in some of these regulations so young people would have a shot at it, because right now they don't, and they may have to wait till they're 37 to get their first home.
Yeah, that's about the case. Former Governor Frank Keating now with the ABA. Thanks for joining us. Good to see you.
Sure enough.
You bet.